My name is Kirk. I'm the CEO of Foresight CFO. In addition, I teach financial management at Georgetown University for grad students. So this is kind of part of a mission, military family, all that kind of good stuff. And our go-to person is Joseph for all things liabilities. How do we right size that so that companies are doing well and are able to see a way forward? So Joseph, can you introduce yourself and then we'll really get things moving here?
Sure. Good morning. Good afternoon, everyone. My name is Joseph Muse. I'm the founder and owner of a company called Business GPS, something I started 7 years ago with the very unique model of helping companies in a variety of ways on contingency. The idea is that when you're struggling, you're going and you're seeking help. A, are you getting the right help? And B, people tend to be motivated by their hourly rate or their retainer, doesn't necessarily put the business interest first. So it's a unique business model, maybe 2,000 companies or so that have come to the doors since we opened up.
Yeah, we definitely done more than a few things together to really turn something from kind of a scary place to one that's working quite well. And I see people coming in. So like Dana from Los Angeles, we got New York, West Palm Beach. We had a good cross section of folks here. So let's to make sure we really understand who's in the room so that we can gear this conversation to you. I'm going to put 2 questions up for a poll. And the first question is, what was your top line revenue in the prior year? With the second question being, this year with COVID, do you expect your revenue to increase, decrease, or stay about the same? And your responses are completely anonymous, right? I'll share the statistical results with everybody, but your individual response is anonymous and it stays with you. So it'd be great if we can get most of the folks. Good, we got 70% voted already. That's fantastic. That's the exact number we look for. We're numbers, Growth CFO and accounting. We like the numbers. So we'll keep it open for just a second more if anybody else wants to vote. And I'm going to share the results and we'll take a look at where things came out. Okay, so most of us, 80% almost, are got companies doing 0 to 5 million. Obviously 20% we got 1 doing 5 to 10 and 2 doing 10 to 40. Definitely there's a couple things for companies that all different sizes that Joseph's going to show us on how to basically restructure the debt and then work on the other liabilities like tax and AP. And this is interesting. Just half the folks expect their revenue to increase this year. The other half is decreasing, right? Nobody's going to stay the same. So either place that you're at, getting the liabilities, one step closer, one step better is going to only help the bottom line. So let's go right into things here, Joseph.
Yeah, and I think that poll question is the response is really interesting because we know as business owners, the business is a living, breathing entity. It's never staying the same. Every day is different. So it's interesting that people said they're either increasing or decreasing. Nobody's staying the same. So that's how a business is.
Yeah.
So okay. So to the slides. As I was mentioning earlier, we take a very different approach, and that is that we do things on contingency. So my view is that how do I get your business 6, 12 months from now, sometimes longer, sometimes shorter, but in general, 6 months from now, to a solid financial footing? That's my motivation. And we target or we use savings, dollars saved as one of our key benchmarks. Cash flow improved is another one of our key benchmarks. So, for example, if I save you $100,000, then I'm going to charge you a small percentage or reasonable percentage of the savings, and then I give every client 12 months to pay the bill. So again, it creates an alignment of interest, which is just the business. We get distracted as business owners. Oh, we need to take care of this. We need to take care of that. That's simple. What is best for the business in the long term? Because if we stay focused on that, everything will work. And if that's how we have structured our pricing, so if a client signing up with us today, which is the end of September, then of 2020, I'm thinking next summer, next spring, I need to have this person to a certain level of cash flow and a better balance sheet, and then they're going to pay me out over the next 12 months. How do I get them to the best place, again, 6 to 12 months?
Yeah, and you guys do have, I mean, your conversation is based on contingency, so you really get in there and do the work, and then based on outcomes.
Yeah, talk about motivation. I mean, it's as my family will attest, it's a 7-day a week, 24-hour a day job, which is absolutely fine. But it's, again, the little thing of financial alignment makes a big difference.
Yeah, very good. You ready to step into the problems that we're going to solve today?
Sure, sure. So we cover here some of the basic problems. So the best place to start is when you're looking at the liability side of your balance sheet, or you're just thinking about what you're paying out every month. How do we minimize that? How do we reduce that? So on the list here are, 10 various things that we deal with every day. Toxic loans, some of those cash advance loans that are out there that are out at outrageous fee structure. Vendor debt. Hey, I need to work with the vendor, but I'm also kind of at a standstill because I owe them money. How do I work through that? Equipment loans, landlords, bank loans, IRS, credit cards, legal issues. I've got a client here in California that we started working on about 18 months ago. He had 24 legal matters open, meaning he'd been sued by 24 different people, 24 different creditors, and imagine the time and effort to clean it up, which we did. So payables, anything over 90 days, and then ultimately credit repair, which we'll talk about a little bit more, but it's getting your credit score to a higher level so that you can qualify for better money, so that we can reduce some of the debts that are on your balance sheet. Ultimately, let's go back to the big picture. Let's keep it simple, which is a common theme that I have, because running a business can be very complicated and very distracting. We need to keep it simple. The simple idea here is we need to keep as much cash in the business as possible. Businesses don't go out of business because they don't have enough cash. They go out of business because there is no cash. It's not that they have too much cash, it's that they don't have enough cash. So the other part of that is, if I can give you $1,000 extra, $10,000 extra every month, as a business owner, you can take that and you can make $20,000. You can double that, and you can turn that money and grow the business. So cash is like fuel in the gas tank. You need to have enough fuel to get where you're going. And that's, reducing the debt is one thing, but increasing the monthly cash flow is another.
Yeah. Hey, Joseph, just to weigh in here, I mean, like the that number of lawsuits, any number of lawsuits is a huge distraction for us CEOs, right? We got to,
yes,
instead of selling, delivering, coaching team members to do better with our clients, we get pulled into this other place that's usually pretty negative, right? That the whole litigation, and it's expensive, right? So by having this liability side of the balance sheet cleaned up, paying vendors on time, right, based on whatever agreement you get into.
Yes. Yes.
And, the vendors are showing up, they're producing, they're avoiding all these kind of like death spiral distractions. So it's huge. And I come to realize how many companies getting tangled up in lawsuits.
It is. And every entrepreneur I talk to, they're positive people. They're can-do people. That's why they're entrepreneurs. And they want to pay everybody. Yes, I want to pay. Yes, I want to pay. It's a big burden here, especially if the business is under stress. I find then fear sets in. And then we're kind of getting into the psychology of it, but it's very important. The owner of the business isn't the same. He's lost his mojo. He's lost his confidence. And so if you get a call at 9 a.m. from the landlord saying, hey, if you don't pay the rent, I'm evicting you. Even if you know that that's a bluff, even if you know logically, well, he can't rent out to anybody else, it still sits on your mind. And you're not the same when you're talking to your customers, your staff, whatever. So what we do is, we take all those calls. We take all that communication. Listen, partnership. You go run your business for the next 6 months. Let me focus on this. Give me a budget and a timeline that fits for you and your business. And Kirk, this is right before we got on the webinar. You and I were talking about a client that we share. And what I was stating was, even when you're weak in your business, you still need to be the guy in control. So that's how it is. If your landlord's calling or the bank's calling, whatever, you need to be the guy in control. You need to be calling the budget and the shots. So that's what we help you execute on. You go back and run the business.
Yeah. So if the audience out here, I mean, we got a nice small group. We can actually interact more. So if you can relate to what we're describing, these feelings of, that weight on your shoulder just starting to become a crush. I've been there, right? I understand it with, with clients. We've been there. We feel it. If you can relate to this, put in the chat box kind of where you're at and what your experience is for Joseph and I to pick up on. But Joseph, you ready to advance to the next slide here?
Sure, that'd be great. Okay, so obviously COVID, it's a struggle every day. Business already was a struggle. Business is not easy. Only business owners really understand that. Business is not easy, even when times are good. Obviously, now when times are difficult, it's a whole nother ballgame. And in general, it's a lack of cash. But we're back to the idea that how do we increase your cash flow? You can accomplish the things you want to accomplish. And the way that I view it is everybody, not just the owner, but the employees, the creditors, the bank, the landlord, everybody needs to have the same focus, which is good for the business. It eventually is good for everybody. So I call the bank and I say, listen, my client can't pay you for the next 9 months or 12 months. And we're only doing this so that we can pay you long term. It really is for you. It's just hard for them to grasp that in the moment. So let's just stay focused on one thing. Saving all that cash, focusing into what gets the best return, and then wake up in 6 months or a year, your revenue's up 25%, your cash flow's improved, and then you can go back to everybody and take care of them, and they're your friends. They're happy. You've satisfied. So, cash is it. And going back to the psychology, as a positive person, as an entrepreneur, you tend to think, well, I can work through this. I can make it happen. Don't worry, right? And you tend to overshoot. You tend to not be as conservative on the cash as you should be with this. So please keep all that cash. Our process. So I started this in, as I said, 7 years ago, and I have learned a lot in the process. And one of the lessons that I'm constantly learning is that every business is unique. Not only is every business unique, but every CEO, every owner is unique. And so the most important part of this is that we need to really understand who it is we're dealing with, the owner, what their goals are, what their situation is, and then we need to dive into the business a little bit. So, as part of the issue with my business is that it's not a scalable, easily scalable business. Because I can't say to a new hire, hey, follow these 20 steps, tell the CEO this, and then everything works. It doesn't work that way. So the key here is the assessment, number one. Number two, in terms of goals and budget, you're in the driver's seat. You call the shots. I've got clients who signed up with us in 2016, 2017, said, Joe, I need 2 or 3 years. I'm in the retail business, for example. I need 2 or 3 years. I got millions of dollars worth of debt. How can you buy me 2 or 3 years? Don't worry. There's a prescription. Follow this plan. I'll get you the 2 or 3 years you need. And we've been able to do that. So it's just to reiterate, the business owner is in the driver's seat, although a lot of times you don't feel that way. That is indeed the case.
Yeah, very good. And we got participants here talking about they got lawsuits going on, the cash is being run down. I mean, it's exactly what we're talking about. And
sorry, go ahead, Kirk.
Yeah, just going to say, we're seeing more of this than ever before. More needs to restructure debt, negotiate tax. I mean, more than we've seen more in the last 6 months, and it's building, right? The cumulative pressure of the economy. We're in a recession. It's building. We've seen more in the last 6 months than we saw in the last 5 years, straight up.
And I think it's getting worse. I think the creditors are getting more aggressive now. Okay, COVID's over. Or, hey, we're out of time. We the bank, we the landlord. we're out of time. We need to do something.
That's
And
right.
so, again, getting to the psychology that seems to be the theme here, taking action is critical. When fear sets in, for most people, for all people, they tend to take less action. Really, when fear sets in, you need to take more. I don't know if that's, hey, I'm second guessing myself. I don't really know what to do, or I'm scared. I don't know what to do. Whatever it is, it's about taking action at this point.
Yeah. It's depressing, right? You're struggling with payroll. You can't pay your vendors. You're starting to do things like not pay payroll tax, which is a serious compliance issue.
Yeah.
I mean, it's depressing.
Yeah.
Straight
And
up.
so I just a little bit of background. I'm 50. I started my first business when I was 19. Been working for myself ever since, and some ups and downs. But the biggest down for me was in the 08-09 recession. And I turned to my attorney. I turned to my CPA. Hey, what do I do? I'm cutting staff, what have you. I had lost my confidence. I didn't know what to do. And, my attorney said, sure, I can help you. Amy, my retainer, my CPA, essentially the same thing. And they didn't have any option. What eventually I did was I took control myself and I said, hey, nobody wins unless my business wins. And I learned the hard way by going through the process. It's not positive. It's not easy. It's easy to second guess yourself when you're used to having success and you're not used to being here. And that all the more reason why you need to have somebody. It doesn't have to be us. It can be somebody else. But you need to have somebody help you through the process, because the business in times of distress needs twice as much, needs twice your productivity. And because of the stress and fear, you're only able to give half of it.
Yeah, that's excellent. And getting comments from different folks here, and some of those that are given specific numbers, definitely have a conversation with Joseph about resolving that. That's a big price to pay every month. So
there really is a lot that's possible. So I know we're going to talk about creative financing here on this slide, but it really does come back to one of the first pieces of advice I have, and Kirk, I know you'll appreciate this, is I tell people, get with an Excel spreadsheet and write for the month of October coming up, how much am I going to get in the door? Let's say that's $200,000. Then subtract from that $200,000 the highest priority item. Work from highest priority to lowest priority until your $200,000 is fully spent. That's your budget. That's it. Everything after that you haven't paid then goes into a different bucket that says to be worked out later. And that's where somebody like us steps in. Okay, how are we going to get that worked out later? And then we're also looking at that $200,000 in that example that you think you must spend, and we try to tighten that up a little bit so you've got some cushion. You've got a plan B. That step right there is critical. Everybody should be doing that. If you haven't done already, that is your guide. That's your Bible. That's your workout regimen. So I highly recommend doing that. Numbers don't lie, right? Numbers don't sugarcoat it like people do. Okay, so for creative financing. So part of the solution in all this is what I've talked about: reducing your debt, increasing your cash flow somewhat organically, because we're shrinking down payments every month, shrinking down your obligation, getting people to work. But it would be nice if we had some good money out there to be able to inject into the business, like gas in the gas tank. And as we know from experience, not all money available is good money. I'm sure everybody has gotten emails, phone calls from cash advance lenders, for example, where they're willing to give you money at a wonderful rate of 80% per annum, which only deeper into the hole. I had one client with as many as 22 cash advances. So all those do is dig your grave a little bit quicker. We want to not take those. We want to look for alternatives that we think make sense. And that comes back to the idea of help us understand your business, and let's try to match you with something that allows it to be a positive for your business.
Yep. And Joseph, just to echo, a lot of times these like, Cabbage, these other companies, they don't, the way they structure it, it's not interest rate, it's fees. But when you calculate it as an interest rate, it's easily 30, 40, 50%, 60, 70, 80%. And unless you have that kind of profit margin in your business where you can service that level of debt, for most of us, it's a death spiral. You get a one-time infusion, it feels good that day, the bank account has more money in it, and then literally they take money every week. Every week after that, it's like gut wrenching. You don't know when you're going to hit the trees.
And a lot of them take it every day, and you hit the nail on the head. It feels good. So it's an emotional decision. Oh man, I need cash. I'm stressed. I figure out what to do. Okay, let me click. These people have been emailing me. Great, I got the money. However, if you went to your computer and you put it into an Excel spreadsheet and you saw what you're paying, and you forecast out October, November, December, you go, oh my God, that's a terrible deal. I'm gonna hit an even bigger wall come November 15th or whatever that is. So again, it's getting business is logic. You have a passion, that kind of emotion is good, but getting to logical decisions where fear and stress is not on your mind, really key.
Yeah, and Dana has a question. She's talking about, she wants to understand her break-even points and forecasting, exactly what you said. You can see how it lines up. And Dana, I'll send you a PowerPoint to the habits of profitability that show those financial best practices. And I'll send that to you. Plus, if anybody else wants it, email me. And then if you want to go deeper beyond the PDF slide deck, just hop on a call with me. I'll talk through it with you. Okay.
I've been doing this for 7 years. I have a cash flow positive, profitable business. I still sit down every Friday with a 30-day forecast. And I look back at my week. What have I done with basic metrics? What have I done with cash flow? And what am I projecting out the next 30 days? I still do that. It's a wonderful habit. I think that's probably, Kirk, a lot of what you develop with your clients is trying to get to the right habit.
That's right. That's right. You ready for the next slide here?
Yes, please.
All right.
So this is a great slide. The SBA has a lot of options. It did have a lot of options. Now there still are some. But the SBA money is such good money. The problem is, shocking I'm sure for some of you, the government doesn't really communicate what's out there, how to get it, how to qualify, etc. So I find even today, 50%, I'm talking entrepreneurs, on average, 50% of entrepreneurs out there still have not taken advantage of the SBA programs. So, maybe the government adds new programs, maybe they don't. I'm not counting on the government as my plan for success. However, the EIDL program is out there. Every company with revenue has a right to that money or qualifies for that money. You have to submit it. You have to submit it the right way. And the one criteria to it is credit score, which I'll talk to you about in a second. But if you look at the slide, it's $150,000. There's no personal guarantee. It's 3.75. No payments for 12 months. I've had business owners tell me, hey, I don't really need the money, but I'm going to take it, and then I'm going to invest in an office condo or something where I'm going to get a rental return of 8%. So there are a lot of different ways in which you can use it for the business. It is so cheap. The problem is it's just trying to get through the red tape to get there. And these days, the SBA is really backed up. So the one, coming back to the one threshold that you have to meet there, the one real threshold, obviously it's a lot of paperwork, financial statements. It tends to be tied to gross margin, which the SBA doesn't tell you. The key criteria that most people get declined on, and oh, by the way, if you filed for this, the decline rate is about 50%. So for every 2 that apply, 1 gets turned down, and it tends to be for a credit score. So the credit score on the right side of that slide is really important. You're looking for a 620 or better. That tends to be tied to your FICO 2 credit score. For those of you with credit scores, they have different credit bureaus. The FICO 2 is what they are using. And so for some business owners, they don't have a 620. So what we do is we work with them typically 30 or 60 days, and we do some credit repair for them. We've gotten people at the 400s up to the 600s, the 500s up to the 700s. So you can do some amazing things with your credit. It adds on, yes, it adds on a little bit of time, 30 to 60 days, but the payoff is tremendous. You're able to qualify for an EIDL loan of $150,000. Then one step further, you're going through the credit repair program for accounts that are closed. You know, everybody's in a different shape financially. But for some of our clients who are really struggling, let's say they're in hospitality, restaurant, etc., they've got closed credit card debt, closed American Express debt. I mean, it's not a pretty picture on their credit report. We're able to permanently remove that debt from their balance sheet. So, for example, we just had, I think it's on one of our examples coming up in our slides, but we got one business owner from a low 500 to a middle 700 EIDL, and we were able to MX obligation of 100.
Hey, Joseph, your mic is cutting in and out. I'm not
Sorry.
Sure. Yeah.
Is that better?
It should be better. I think when you're moving your head, it's so if you speak more towards the mic, we'll be okay.
Understood. Sorry about that. So did you catch most of that, Kirk?
Yeah, we did. There's a question. One part that was missed is your comment about the EIDL rejection part about gross margin.
So the EIDL, the SBA doesn't really express this to people, but your loan amount is tied to your gross margin. So I have clients ask, how much am I qualified for? How much am I going to get? And it's typically half of your gross margin. That's not a perfect, they don't hold to that every time, but that's a good gauge of where you would potentially end up.
There you go.
Okay. Okay. And so then what I was saying is, I talked about credit repair, the ability to not only increase your credit score, but to also eliminate some of the unsecured debt in the process as a way of cleaning up your personal balance sheet. But let's be real, for most business owners, the business balance sheet and the personal balance sheet are all tied together. So we try to look at it holistically from that standpoint. And then just there at the end, typically the SBA funding, our experience has been, is that it's a 7 to 21 day window. I think because we work on contingency, including with our SBA submissions, we file a very complete package. We've got relationships over at the SBA, and our success rate is a little bit over 90% right now, as opposed to the national average, which I said earlier was around 50.
Good, great. Next slide.
AR funding. So this goes back to, okay, how can we find some good money options? And it's hard at this time with lenders, everybody's skittish, nervous, etc. AR funding, it works, and it works well because the lender is not looking at your credit worthiness. They're not looking at your credit score. They're not looking at really at your financial statements. They're looking at the credit worthiness of the customers that you serve. So if you're doing B2B, it's a great fit. And the AR funding of today is not the AR funding of 20 years ago. It's done in a very professional manner. Payments are still made to you directly. It's just simply a line of credit based on your AR, which can go up to even 120 days, and you still get credit for it, and it's relatively inexpensive. So that we're finding a lot of success with the SBA. We're finding a lot of success with something that's a hard asset, but we're finding probably the most success right now on the AR funding side. So if you're B2B, that's something you should be looking at. Okay, next slide, Kirk.
Sorry about that. I was on mute to make sure there's no background. There's a question about, is this different than factoring?
Great question. So it is different than factoring. Factoring, I kind of got to my comment of it's not the same as what it was 20 years ago. AR funding, if you go to Bank of America and you get a line of credit for your company, they're going to base it on the AR typically. And they're going to say, tell your customer to make the payment out to you, Joe's IT company, and remit the payments to Bank of America. They're not factoring your invoices. They're giving you a line against your invoices. There's a difference in there. So a factoring line is going to say, hey, please remit payment to Steve's factoring company, or the factoring company itself is saying, I bought those invoices. That's different. And that's, you want to try to limit the interaction with your customer from your AR funding organization. And you always want to give your customer the sense that, hey, you're doing well. And factoring, the term factoring might scare your customer. So if you do it right, it's going to be positioned as, great, your business qualifies for a line of credit. Nothing to do with factoring whatsoever.
Yeah, thank you.
Okay, so some client results. The top one actually is one I had mentioned earlier that had 24 judgments. 24 judgments, a foreclosure notice, and 2 IRS audits. And you see from the summary there, it had 3 times the debt compared to annual revenue. That has been quite a case, but it has worked out well, doing well. So that's kind of a larger, more complicated example. There's a lawsuit example. A lot of customers come to us with lawsuits, or even after lawsuits and judgment. And all of that is still fixable. All that's still negotiable. So there's an example there. Then a good credit repair example where we've been able to help that client in Maryland with getting some EIDL loans, improve their credit, get rid of their Amex. A very comprehensive fix. And that's actually a great story because he was literally out of business. Laid off everybody for about 60 or 90 days, didn't have a plan for reopening. And by adding in credit score first, we're able to then get him a lot of EIDL money, and then be able to eliminate the American Express debt at once. That's a great example.
Yeah. Okay, great. Next slide.
Next slide, please. Okay, so this is one that talks about cash advances, and so that's really relevant. I talk to business owners every day who have, you were talking earlier, Kirk, about cabbage, and that's one of the better ones. Some of these other cash advance companies will literally pay you a visit at your house or at your business to try to intimidate you, like borrowing money from the mob. We deal with them every day. Tax reduction, that's a great one. I have another one, client out of Atlanta who owed about $2 million in payroll taxes. And I got him on a 20-year payment plan, which is amazing. Imagine a 20-year payment plan with the IRS. Landlord-tenant dispute, to be able to, that's a difficult one, a common one, however, for people. And so we've been able to settle it. Any issue that you can think of, or any creditor that you have an issue with, we have a unique experience. I've done it for over 2,000 companies. I've seen things that, most people would never see in a lifetime.
Yeah, you are literally a specialist in this area, right? Even more than most CFOs. We don't only focus in that area. We focus top line, bottom line kind of stuff. So very good.
Right. That's exactly right. Some of those other things, those CFO responsibilities, Kirk, that's not our forte. That's more your forte. But when it comes to this stuff, this is what we deal with every day. Cleaning up the messes, buying time, saving money, fighting alongside our client, because that's how we get paid. We're not going to get paid if the business doesn't make it. We're not able to make a material difference in the cash flow. So this is an interesting slide. So I try to look for lessons for myself and for my clients with this unique experience that I've had. 2,000 customers. Okay, what's the common thread? What are the mistakes that they're making? And without a doubt, the number one issue is not having enough skill or control in the accounting office or in the CFO position. It is present with every customer or almost every customer, every client that comes in. So a lot of times you have somebody who goes, listen, I'm really good at providing X service. I know how to make these widgets. I know how to sell my customer and get the order. There's the salesman aspect. There's the skill set of providing the product. But the financials get overlooked. And then you have scenarios where as the business grows, you still have Susie or Billy in your accounting office because you trust them. And they're great people. But they're not there yet to run a business doing 10 million. They were good when the business was only running at 2 million. So you haven't grown that office the way that you should. I tell people, listen, if you want to be, as we said earlier, businesses are going up or it's going down. You obviously want to be going up. You're looking for, let's say I'm doing 10 million today. I want to be 20 million. How do I get to be 20 million? You act like you're 20 million today. You get the financial controls in place today. You get people who are watching your back and are willing to tell you, hey, Steve, hey, John, we're spending a little too much here. Somebody who has a strong enough personality and is knowledgeable enough to be able to say, hey, the car's getting a little bit off track. Let's get it back on track. That is absolutely the number one issue. Just to add to that, when people do get into a jam, the other issue that comes up is what I said earlier, and we've kind of said throughout, the psychology of it. Then all of a sudden, you stop being yourself. You stop being the person that got you to the level of success you achieved in the first place. So what we need to do is get back to who you were and then supplement your accounting office with somebody who has the knowledge and can run it.
Yeah, just kind of pick up on that. I mean, that's what we do, right? Because most, CEOs go into business is not because they're experts on that financial management side of it, how to use the numbers. So by combining their skill with a specialist, then you get into, the monthly financials. You're meeting with your P&L managers. They explain the variance to budget. They explain to the CEO what action they're going to take. It just starts to take a lot of pressure off. The money's coming in even faster than expected. And you're at that point, you have the CEO has a little space to breathe. If we're going to do the budget forecast, for the next 12 months, we have time to run scenarios and do the what if, and that way we're engineering profitability. So it starts to feel really good. Even if you're at a point where you got to pivot, what clients should we go to? What products and service do they need? Who has the ability to pay, right? So you can pivot, you run the numbers. So you can figure out what, based on what we know now, what is, the best next step forward. And then even using benchmarks. If you're going to get a loan, if you know that you're in the top percentile, then you're much more eligible to get the kind of access to capital that you want at favorable terms. And likewise, you use benchmarks to even wake up and, look at identifying even better sales and delivery options for your business. So but basically, you can summarize having those inadequate controls that you're talking about. It's basically flying blind, without a radar, versus if you have these cash forecasts, the budget, and the monthly financials, you can actually see quite a ways down the road. So it helps out quite a bit.
A business is an education, and it's always testing you, and it's always finding your blind spot. So for just to reiterate this, entrepreneurs are positive people. Don't worry, I got it. I'm going to take care of it. That's why you start the business in the first place. So you've got to always make sure that positive approach doesn't create a blind spot for you. And two, the idea that okay to continue to grow with somebody who hasn't grown in your financial office is a massive blind spot. Real quickly, Kirk, I had 2 children and then I had a third. I go, well, that's a 50% increase in the complexity of my family and my responsibilities, right? 2 to 3. Didn't work out that way. It felt like a 150% increase in the complexity of my family. And a business is the same way. Going from 2 million to 3 million, it's not a 50% increase. It's far more than that. You can't just keep it all in your head the way that you used to. You have to change your habit.
There you go.
Okay, FAQs, just real quick. Who do we deal with? All different types of industries, all different sizes, different types of issues. We're looking for the right people with the right model that hit a rough patch. So a lot of it is really betting on people. We're investing in people. I think every business, frankly, is a people business. Talk a little bit about our contingency solutions that I mentioned before. So that kind of covered that.
Very good. All right. So, I mean, Joseph really is the specialist on this. I mean, we wouldn't be doing these webinars if I didn't have a deep respect and trust based on the work that we've done together. And so some of these questions are coming up that people want to find out about the credit repair and the restructure. It is definitely worth a conversation. And I found Joseph the kind of guy, he'll talk to you. He's an expert, but he'll talk to you like a family member who cares about you and, lay out the options and, encourage you to take action. So it's worth the phone call. Joseph, you want to put your shout out there?
Sure. So the best way to reach me is by email. Certainly call. Sometimes it takes a little while to get back because I spend a lot of my day, putting out different fires, and really to come back, you're looking for a team that has the same view that you have. If it's good for your business in the long run, it should be good for everybody. So that's how I try to approach it. I do, Kirk. I appreciate the kind words. I do try to treat everybody like they're my brother, and not think about anything other than helping. And then eventually, if you treat people that way, you attract those people. They want to work with you, and so it ends up being a good fit.
Yeah, it really does. More than ever, what you do is really needed. So kind of to bring this thing home here. So where we come in as growth CFOs and outsource accounting is we use the numbers and business building experience to complement what you guys are doing as CEOs. The big 5 are, winning new customers, keeping the ones you have, having the right people who are delivering quality to your clients, access to capital, which is this conversation here, and then achieving that top percentile financial performance. So we do that. We teach, learn, and do this through what we call the 2% CL habits or profitability, and it gets into those things that we talked about in the slides of the 2 CEOs who are stressed. So in my case, if you want to learn more about how to use the habits of profitability together side by side, just either call me or shoot me an email. I'll hop on a call with you. But the main theme for today is the liability. What Joseph does is, if you got debt that literally you feel like you're suffocating, you can't breathe, that you're trying to make those monthly payments or weekly payments, there could be some options to restructure that to get something that you can live with, reducing your tax burden, and then even going to your accounts payable, your vendors, and negotiating some kind of different settlement, different numbers, so that you can continue to go forward. And his team can do it differently than I can do it as the CEO, because he's less emotionally involved. He's a third party, he's arm distance. He can be more consistent. He can focus on that while you focus on growing your business, and he can do it with a level of logic and more rational that even the vendors appreciate negotiating something that works. So Joseph, appreciate jumping on the call and getting the word out about how we can help CEOs using what you do really well.
Yeah, and so I appreciate your comments there, Kirk, and just a couple of thoughts. One, when we're done with vendors, that comment right there is a really good comment. When we're done with vendors, 95% of the time, the vendor is so thankful that we called, so thankful that we gave them the straight story on what's going on, and they feel more like partners invested in our client's business. So That's a hot topic these days. And then one other thing I saw on the chat real quick, Kirk, somebody revenue is below our normal range and asking if they still qualify. My answer is, listen, if somebody's interested in talking about their business and needs help, I'll certainly talk to anybody. I'm here to help. Whether they end up being a client or not, I'm happy to talk to them, happy to give them some advice and guidance in terms of how I would handle situations, and we go from there.
Yeah, very good. So we're at the 25-minute phone call. You just never know, right?
Right. That's exactly right.
So very good. So we're going to send a link out to this recording as well as the slides, so you have our contact information. And we look forward to, talking with you guys who have an immediate need and making things happen. So thank you so much for jumping on with Joseph and I. We'll see you soon.
Thank you, everyone.
All right. Bye-bye.
Thanks, Kirk.